Hello traders and welcome back to the Forex Kick. In today's video we're going to explore an essential tool that can help you anticipate when the market might shift direction. So we're talking about the Fibonacci Time Zones, and this powerful technique allows you to forecast potential turning points in the market based on time and not just price. So if you've ever struggled to time your trades effectively, stick around until the end because this could be the missing piece in your strategy. By mastering Fibonacci time zones, you gain a deeper understanding of how to predict market movements and improve your entry and exit points. So without wasting your time, let's get started. Let's understand what the Fibonacci time zone is. So the Fibonacci time zones represents a sophisticated approach to market timing, drawing from the famous Fibonacci sequence, which is the 1, 2, 3, 5, 8, 13, 21, and so forth. These numbers create vertical lines on your chart, helping you identify potential moments when price action might reverse or accelerate. So this is the TradingView platform, and you could just go to the Fib time zone right here. This is the Fib time zone or the Fibonacci time zone. Select it and just put it on your chart, and you can see how the 1, 2, 3, 5, 8 have the 13. This is the 13, and the next is the 21, and the next is the 34, 55, and so on and so forth. They are based on Fibonacci sequence. So these numbers create vertical lines, timelines on your chart, helping you identify potential moments when price action might reverse or accelerate. So think of these time zones as windows of opportunity. Unlike traditional price-based indicators, these zones focus purely on time intervals, giving you a unique perspective on perspective on market movements. So when you plot these zones on your chart, you are essentially mapping out future time periods where significant market events are most likely to occur. So remember, these zones don't predict exact prices, they predict when significant moves might occur, and this makes them particularly valuable when combined with your existing price action analysis and technical indicators. So how are these zones calculated and how can you identify them on the charts? So first is to identify a swing point. Could be a swing low to a swing high, swing movement like this. This is a swing movement. Have this pullback to this high. And this is a swing low. And this is a swing high. So this point will serve, this swing low to the swing high will serve as the anchor for your Fibonacci time zones. And so you plot the vertical lines based on Fibonacci numbers. Let's quickly put the Fibonacci time zone from this swing low right here to this swing high. And this will plot the numbers on the chart, as you can see right here. Now these numbers, these horizontal lines, these areas are areas in price where price action might accelerate or reverse, or we're expecting significant price movements around these time zones. So the next is to interpret these time zones. Each vertical line represents a time zone where price action might either reverse or accelerate. We've talked about that. And now the further along the Fibonacci sequence you go, the wider the intervals between the zones become. For example, you can see it getting wider from the 3 to 5 is kind of wider than from the 1 to 2 or the 2 to 3, and it goes like that. From the 8 to 13 is kind of much wider than the 3 to 5. So key points to remember is that the first few Fibonacci time zones are close together. The 1, 2, 3 are close together, but as you move further along the sequence, the 5, 8, 13, the time intervals widen. And these zones don't predict exact price levels, but rather suggest when major market moves might happen. So let's talk about applying Fibonacci time zones in your trading. To use them effectively, the first step is to identify the major swing points, like the swing high, the swing low here and the swing high here. I've explained that already. This is another swing point. You can see this is a swing low, and this is a swing high right there. So you could use that when you are analyzing with the Fibonacci time zones. But let's use this example we've already started with. And now once you have your swing points, you can plot the vertical lines as you've seen them on the chart. And the next is using this time zones for entry and exit strategies. For entry strategies, look for confluences with other technical indicators such as support / resistance levels or momentum indicators like RSI. And the idea is to enter a trade when price approaches a key Fibonacci time zone and shows signs of reversals or continuations. I see this is a major support level right here. I'm gonna use it, mark it as a zone, and you can see price reacting. See price reacting from this time zone, the number 1 time zone on the Fibonacci sequence. The number 1 here. After that, after price got to this area, it started giving us this reversals. And as we go to 2, we are in a major support level, and we should be looking for buying opportunities. Zooming in, you can see series of chart patterns. You see this engulfing pattern right here, confirming all of these were happening around this support level. So it's wise to look for buying opportunities coupled with the time zone. And also for exit strategies, the Fibonacci time zones can also help you determine when to exit a trade. If price is approaching a key time zone and shows signs of slowing down or reversing, it may be a good time to consider taking profits or tightening your stop loss. Like you can see here, as we had this pullback, this push to the upside, we could consider closing your trades at the next time zone or at key resistance levels like this one. So it's not a hard rule, it's not a very hard rule. So this is another example. You can see this was a resistance turned support right here. And as we had this retracement from this major time zone, it was an indication to be looking for potential opportunities to continue the setup. And that's how we had this push to the upside. Let me look for another example using the time zone. So this is a significant price movement. You have the swing high, have the swing low, and if you add your Fibonacci time zone around this area, you can see price reacting off these times. You can see this. You can see price reacting off this support level right here. And this was in a major time zone, giving us minor push to the upside before we continued our bearish trend. This was another one. This was a major resistance level right here, and it's occurred around this time zone right here. And you see price reacting off that resistance and in line with this time zone, the 13. And you can see price giving us the push to the downside. And it's just like using it as an added confluence in your trading. So let me look for another good example. Okay, this is your swing low to your swing high. Perfect. So if I add I'm gonna add this Fibonacci time zone right here, and you see price reacting off these zones perfectly. See, this is a major support level, and I see price reacting off of it at different time zones. We had it reacting at the 2, we had it reacting at the 3, and that was how we were able to catch this buy trade from this support level with the added confluence, the Fibonacci time zone. I'm just gonna look for another example. And you can see this from this low to this high, and you can see this Or let me use this to this. Now this is great, and you can see this resistance on support, and it corresponds with the second Fibonacci time zone, which is this. And after that, we could start taking buying opportunities. After that, with our stop loss just below this, and take profit levels at 1:2 or 1:3, or just using the Fibonacci time zones as added confluence to support and resistance, or supply and demand, or ICT, or SMC, whatever trading strategy you're using. And price basically reacts at this time zones, and you could spot some good trading opportunities using the Fibonacci time zones effectively. So right traders, we've come to the end of today's video. By now you should have a solid understanding of how to use this tool to anticipate potential market turning points and improve your trade timing. If you found this video helpful, don't forget to hit the like button, subscribe to the channel, turn on the notification bell so you never miss an update on the latest trading strategies. And thanks for watching, and happy trading. We'll see you in the next video.